US Stock Market Review. Greetings. This review will focus on the companies that you asked to review in the US stock market. Which companies to buy and which ones to avoid. All this will be in our 2 days review. Freeport McMoran Promotions. Honestly, it's a pity that I didn't pay attention to this company earlier. This is a really interesting enough story that can bring good profits. What is this company? It is the lowest cost American copper producer. Copper is another rather interesting asset that speaks of the pace of economic recovery. The more the economy returns to normal, the more demand for copper will be in the world. But the company is famous not only for copper but also for gold mining. All assets that we consider to be interesting and promising in the long term are directly related to the companies that are involved in the extraction of these assets. Now the price is not so favorable. I would wait for pullbacks to enter here, and this chart is very beautiful. Not a bad option in the long run, but only while the cycle is going on. As we can see, demand can also fall, and therefore it is worth being careful. I personally enter on pullbacks. If it is not important for you, you can enter right now, but the position may go into a small minus. Apache shares. Also, there were questions about Apache, an oil and gas company in the United States. To be honest, their schedule doesn't impress me at all. The monthly chart of this company was going down smoothly even before the crisis. This is a falling stock, but clearly not a growth, which means that the company has some serious structural problems, because otherwise why its shares are losing in value from year to year. You can find ExxonMobil or Chevron charts for yourself to have a clear comparison. In my opinion, in the long term, I would not consider this company at all, because the schedule is quite pessimistic. I don't know the exact reason, but investors don't believe in this company. The risks are too high. You can try to speculate in the shares of this company, but of course it is better to just short such companies but no more. I cannot recommend them for long term. Apple shares. And of course, in the end, let's summarize the situation with Apple. Now shares are being thrown off based on panic and irrationality. We are witnessing a short-term fall of one of the most profitable companies in the world. I was asked about Apple, to what level they can shed. Shares can spill up to the red support zone. There will already be buyers who will clearly want to buy the company. In general, Apple is mostly a long-term investment. Here is the principle. If you are sure that they will sell more iPhones and earn more from this, then you should buy these shares at any price, and it does not matter what happens to the shares. This is a confident growth action, and here it is appropriate to carry out averaging without leverage in the long term. Hope I cleared up this point. No need to worry, panic and dump stocks ahead of time. Buy and keep them for at least a year. Plus, average on drawdowns. This promotion is the best strategy.